Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be joined by a special guest from CleanSpark Incorporated to talk about this organization. This is a crypto, or more specifically a Bitcoin mining company based in America that we've covered on the channel previously, and I'm really excited to talk about this one in a little bit more detail. Now before we get into it, please take a second, hit the like button you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of CleanSpark, how you think they stack up to some of the other players in this space, and what you thought about today's interview. Now with that being said, let's get into today's video. Okay guys, thanks so much for being with us today. We've got a special guest from CleanSpark Incorporated, none other than Matt Schultz, who's a co-founder and executive chairman, to help answer some questions and give us a little bit of more insight into their business. So Matt, thanks so much for being with us today.
Hey, I'm happy to be here. Thanks for having me.
Perfect. So we'll jump right into it. First question, tell us a little bit about yourself and how did you end up at CleanSpark or co-founding this organization?
So I have a background in the traditional energy space. We used to put together syndicated offerings for energy investments in traditional oil and gas type stuff.
Okay.
And as we grew in that space and, had an opportunity to be part of drilling and development, even sat on the rig during a, slick water frac into the Mississippi limestone, I really started to understand the way that the energy business related to the environment, and some of the prospects that we came to own had previously been poorly managed, and I was saddened to see how poorly we do as stewards of the planet.
Yeah.
And so I wanted to have an opportunity to do something that was more productive, that benefited the globe. As a father of 6 kids. And so we started to pursue some unique and interesting technologies in renewable energy. Renewable energy led to microgrids, and microgrids led to cost avoidance, greenhouse gas reduction. And then we started to provide those energy solutions to big energy users. So think shopping centers, military bases, embassies, but then that evolved into providing energy solutions for power developers for cannabis and crypto. So we designed our first microgrid for a Bitcoin mining facility back in January of 2018.
Okay.
And kind of developed an affinity for it. Just really quickly, we looked at deploying a series of community-based microgrids in South Africa. And there was definitely need, and there were opportunities that were provided by having power as opposed to energy scarcity. And those projects couldn't even be financed by like the World Bank, because there wasn't a single company that would stand up and say, I'll buy that power. And so that's when we really started to correlate what Bitcoin mining could mean to the energy grid and to distributed energy resources around the world. And that is, it provides an interruptible load that can buy the power when it makes sense, but it can instantly curtail. And nothing else could do that. An assembly line can't do that. A traditional data center can't do that. But a Bitcoin facility can curtail literally in 30 seconds. So we really believe that energy usage is a feature and not a flaw of the Bitcoin network. And so, as an evolution of an energy company, we just see this as the next logical step. And actually, we see Bitcoin as a form of energy storage.
Yeah, interesting. Yeah, it's definitely controversial, right? You hear a lot of people talking about how energy intensive it is, but then you hear the other side, like you're saying, as almost a pressure valve on the system. So that's definitely a cool background. A lot of experience and context there, Matt. I think the most impressive, you mentioned 6 kids. I know I have 2 and I can hardly get by with that. So that's impressive in its own. And a great segue into the next question. So you told us about how you kind of ended up here. Now, can you talk to us a little bit about CleanSpark, specifically the facilities, the business model, the hash rate, and kind of how your strategy maybe differs from some of the other miners out there?
Yeah, it's a great question. And we get a lot of, there's a lot of chatter on social media. People have a really strong opinion one way or the other, pro or anti-Bitcoin, pro or anti-different strategies. So CleanSpark, from inception, we believed that the strength of developing a Bitcoin, a meaningful contribution to the Bitcoin network was to have infrastructure that made sense. So by that, I mean, we target opportunities where there's surplus energy that meets our criteria. So not to go down the track of virtue signaling and get on the ESG bandwagon or anything like that, but we do follow, environmental, social, and good corporate governance kind of policies. So we've located facilities in areas that there's abundant nuclear energy. And because we're a large purchaser of that energy, we have some certainty into what our power costs are going to be long term. So CleanSpark is infrastructure first. We identify locations that we can deploy. We create relationships with the communities in which we operate. So throughout Georgia, our utilities are the local communities that we do business in. So 30 years ago, when Southern Company, which is the holding company for Georgia Power, went through a bankruptcy, there were 49 little communities throughout Georgia that banded together to form this buying co-op called MEAG, the Municipal Electrical Association of Georgia. And at that time, they committed to buy abundant nuclear power that was coming online through the Vogtle series of nuclear plants. So the way that we've made our business work is that we actually buy from these cities. The cities buy from the nuclear power plants and the developer, and the cities make just a little return on every kilowatt hour of energy that we buy. So what that means is, rather than what you hear in the news about people are competing for energy and the Bitcoin is harmful for the grid, we see the inverse of that being true, in that we enable the cities to buy in larger quantities, thereby pushing down the overall energy cost for the cities. And in addition to that, those cities generate revenue based on our power consumption. So it becomes a meaningful component of the city budget. And then in all these rural towns that we operate, we hire locally. We pay above the average wage, and we create high-tech jobs in places throughout rural Georgia. So, our approach has been different. We own our facilities. A lot of our peer group would say, asset light, just own the rigs. But what we've seen is that, from a hosting perspective, now you have exposure to the host, and there are some big companies. Core Scientific is a big host, and it looks like they're not long for the world. And Compute North, they've recently filed bankruptcy, so there's a lot of uncertainty. So here's CleanSpark, that we mined our first Bitcoin in December of 2020, and now we're over 5 exahash per second. We have among the most efficient fleet in the Bitcoin mining space, certainly amongst the North American Bitcoin miners. So we have the highest, or one of the highest, Bitcoin produced per exahash of processing power. We have among the highest exahash per megawatt, and among the lowest overall average energy mix. So in our last 10Q, we talked about the fact that across all of our facilities, our energy exposure was sub 4 cents per kilowatt hour. So we've tried to manage all that. So now I think our last public disclosure, we talked about 19.5 Bitcoin a day. But most importantly, we control our destiny. And we have facilities in small communities that are meaningful, but we've almost gamified our approach to Bitcoin. What I mean by that is, when we take in new rigs, we basically strip them down if we're going to put them in immersion, take the fans off, drop them in an immersion tank, and then we can overclock those. But at the air-cooled facilities, we break up our team. So you got a facility lead, and then you've got team leads, and the mining facility is broken up, and it becomes like fantasy football almost. They're competing one with another. And what that means is, and this is kind of, I think, a really core differentiator for us. These guys are wanting to compete with each other, and it's in good fun, and there's incentive for keeping our peak performance at 99% uptime or whatever the case may be. But what that also means is, I have a transformer issue at 3 a.m. and the team lead over that section of the facility wants to call in, hey, I've got a buddy with a crane and my uncle works for the utility, so I've got guys that are literally 3 a.m. in Washington, Georgia, dropping a new transformer because they don't want to lose the competitive advantage they have, because they're looking to maintain that efficiency, because it's a competition. So that's what sets us apart, because everybody that works on our team is an owner of the company. Everybody has a vested interest. we really incentivize our team and reward that. And so we've created a really fun environment, but what that's led to is super high performance and super high efficiency.
Awesome. Yeah, it's great to see when everyone succeeds together, and it sounds like you're really embedded in these communities, so it's kind of the win-win situation rather than maybe a head-to-head like we see with some other companies. The other point you made there, Matt, that I really liked is controlling your own destiny. I've looked at companies on the channel, I'm not going to name names, that lease out facilities and, like you say, just focus on the actual computers. And we're starting to see, as more and more companies go bankrupt and stuff like that, it's having a big impact on their operations. So when you control the facility, you control the operations, you don't have that element of risk, right? And we've looked quite a bit on this channel at performance per exahash or hash rate, and the impact of that on the number of Bitcoin you can mine and the cost of Bitcoin. And you're right, CleanSpark is definitely up there among any of that I've covered, at least. Now, next question was going to be talking about some of the differentiators. I think you've done a pretty good job of explaining that. The only thing I wanted to follow up there, you guys have 100% focus in the United States. And I know some other companies are spread out in South America, here in Canada. Do you see that as a risk or opportunity with 100% exposure to one company and one government policy?
Well, that's a terrific question. We have a team of people that operate our facilities. You know, Zach and I started this as an energy company almost a decade ago, and you know, we've been through this evolution, and we see, like I mentioned in the beginning, Bitcoin is the the evolution of energy storage. But we've learned a lot along the way. Every facility that we built has been built in phases, and we've learned from phase one how to improve efficiency on phase two, et cetera, et cetera. So I think my point to that is we're very keenly aware that we don't know what we don't know, if that makes sense. And so having a familiar jurisdiction, like we own 4 facilities in Georgia, and we have no debt on those. You know, we have $500 million in assets and less than $20 million in total liability. We've never leveraged Bitcoin. We've never put Bitcoin in a custody that the underlying commodity could be at risk or rehypothecated. And what we do know is our energy relationships and energy mix. Now, I have a lot of good friends in the industry. You know, I of the Canadian companies, you know, I really like Hut. I like their whole team. We've worked with a lot of our peer group, and really what we don't know is the cross-border stuff that maybe we don't have the familiarity with. And there's no shortage of capacity, and there's no shortage of opportunity for demand response or grid participation programs here. So while, you know, some of our peers are operating in Canada and in Argentina, what we're seeing is, you know, there are some stresses in Argentina. There are some stresses in other areas. I mean, I think Hydro-Quebec came out and talked about in an article on CoinDesk, and, you know, whether it's accurate or not, that they were planning to curtail usage for Bitcoin miners off Hydro-Quebec's load. So I think that, you know, that uncertainty gives us maybe a stronger thesis that we really want to stay in our swim lanes. We want to be a participant and a partner with the grid, and we can do that by being present. And, you know, as you start to spread, we've seen opportunities throughout Europe. I mean, Sweden and Norway, Iceland, there are Bitcoin mining facilities. I'm here in Austin, Texas today. We're presenting at the Texas Blockchain Council, and it's interesting to hear the risk and exposure that some of our peer groups have had by choosing to expand and operate beyond their borders. So, you know, for us, it's a matter of risk mitigation. It's familiarity, and it's that, you know, we really strive to achieve that operational excellence that has so far defined CleanSpark.
Yeah, great answer. And just for the viewers, I believe that's Bitfarms that Matt's referring to for Quebec Hydro there and the Argentina, and we've covered that on the channel as well, Matt. And I'm kind of torn on that one, honestly. I see it as an opportunity just to diversify, but like you say, there's a lot more risk, there's a lot more red tape, political hurdles. So I'm definitely supportive of expanding where you're comfortable and you know the rules, right? So that's great. Yeah. Now, next question, switching gears a little bit, and maybe for people that aren't super familiar with miners, we had a member of a Bitcoin ETF on last week. Why would someone want to buy a miner as opposed to just purchasing a Bitcoin ETF or a ETF that tracks Bitcoin, or just trying to hold Bitcoin themselves?
I think it's personal preference, right? So why does one person buy Microsoft and somebody else buy Google? I mean, it's the fundamentals, it's the valuation, it's the model. I think, Bitcoin mining and the Bitcoin space, it's bifurcated just on its face. So, Michael Saylor at MicroStrategy uses equity and debt to buy Bitcoin to give his investors exposure to the underlying commodity. What that means is companies that invest and buy Bitcoin rather than mine it obviously have a much higher cost per coin. So there's an expectation that, Bitcoin is going to significantly appreciate in order to generate those yields or the return that they're looking for. And they feel like a company like that is going to give them a form of leverage greater than just buying the coin directly. As a miner, you get in our mind, you get exposure to both. So there's a debate, and we talked about infrastructure first or asset light. There's another debate to hodl or not to hodl, and the accounting rules in the U.S. require you to write down assets that are worth less one quarter than the preceding quarter. So as Bitcoin has been so volatile, there have been some massive impairments on Bitcoin and massive impairments on facilities and infrastructure for companies that are underperforming. And then we've seen groups that, have chosen to hodl 100% of their mined Bitcoin, but then they lever that Bitcoin. So you can't sell it even if you choose to. So we've tried to have a measured approach. And it was a year ago this month, Bitcoin was at an all-time high. And, we put out a press release and we said, hey, we're going to start selling Bitcoin to cover operating expenses and to a degree, some of our capital expenditures, because we want to be mindful of dilution. A company that endlessly prints shares of stock in order to protect 100% hodl, ultimately, the individual shareholder gets diluted down to the point that their exposure is significantly less to the underlying commodity. And the company has to appreciate so much in order to get a return on investment. Most of these companies, let's be honest, they're not focused on paying a dividend. They're focused on building their hash. So we try and take a measured approach. We use Bitcoin as part of our capital management strategy. We went public a year ago this month and said, hey, we see that there are basically three levers of capital management. The first lever is utilizing Bitcoin to cover operating expense, but also then to cover some of the CapEx to continue to grow. Use Bitcoin to get more Bitcoin. We feel like we can use equity when and if it's accretive. So, if you look, we started using equity July of this year to pay for some of our growth. We bought Mawson Infrastructure. We bought a facility in Washington, Georgia called Waha Technologies. We set the floor on S19 XPs earlier in the summer. We bought a distribution from one of the then top 10 players that couldn't pay for the XPs, and we paid less than $30 a terahash. And we announced last week we bought miners. Coincidentally, it was the same amount that another miner sold, but we bought them at $15.50 a terahash. So we've used a bit of equity to do that, but I think we've diluted the company about 38% since July. However, if you look back to the prior time we used equity, we've grown our hash rate by 5 times. So by definition, we feel like that's accretive and that's returning value to our shareholders. Now, certainly the volatility in the market and everything that's gone on with, SBF and FTX has created some contagion and fear. But, we're not worried about today. We're building for the long haul. And so I think, that kind of disciplined capital management strategy is really a pretty big differentiator for us.
Yeah, most definitely, and it really comes down to time frame, right? I'm looking at the news as well and this FTX stuff and all the bad press, and to me, I say, like, bring it on. I'm in this for the long run, and if you guys are able to build your hash rate and acquire computers and facilities at rock bottom prices, more power to you, right? So that's definitely fair. Now, speaking of kind of the current macro situation here, the crypto winter we're in, I know this is more of a personal opinion or question, but when do you think we're going to come out of this? Do you think we're near the bottom? Any thoughts to the subscribers about that situation?
Yeah, so I think regulation. Pardon me, I'm sorry about that. I think regulation is going to lead to greater adoption, and I think regulation takes a long time to put in place.
Yeah.
But when something happens like what has recently happened with 3 Hours Capital and Celsius and to an extent what's happened to our friends over at Core and what's happening with Argo, but most recently, what's happened with FTX, and different from all of those situations, FTX, it was just a fraud, and there are hardworking men and women that lost a lot of money because people were careless with their approach. And Bitcoin, by design, is perfect. If I want to send Bitcoin to you, it's peer to peer. There's no intermediary required, and so to create an exchange and then rehypothecate the assets that are deposited with the exchange and use those outside of what I think the depositor or the owner of those coins or that currency can be is a big issue. And so what I think is important for everyone to know, it wasn't a regulator that figured out SBF was a fraud. It wasn't an auditor. It wasn't a bank. It was Bitcoin miners. It was the Bitcoin blockchain. It was guys like CZ that said, hey, this just doesn't work. So I think, self-governance and the identification that, at the end of the day, FTX didn't even own any Bitcoin. So the average American or Canadian, they look at Bitcoin as crypto and crypto as Bitcoin, but in reality, there's Bitcoin and then there's everything else.
Yeah.
So, we think that once there's a bit more exposure to regulation, which we welcome and encourage, we work with different policymakers all the time. But we feel like as there's more regulation, there will continue to be greater adoption and differentiation between Bitcoin and everything else. But I think designed into the algorithm, that scarcity is going to continue to drive prices. And even in our own business, it's going to continue to be survival of the fittest and last man standing. So you have to have the right size balance sheet. You have to have the right kind of cap structure. You have to have the right exposure to capital. You have to have the least amount of risk. And you'll be the one that can produce efficiently, supporting the blockchain, making a meaningful difference on the global economy. So the answer to your question really long is, when does that start to recover? And I think the process is now. I think we're close. If you look at the global Bitcoin trust, that GBTC, it's trading at the commodity value is as though Bitcoin were $10,000. So there's such a disconnect. A company like CleanSpark with $500 million in assets and less than $20 million in debt, trading at sub $200 million market cap, when we're $130 million a year run rate, and our last quarter we had 51.4% positive adjusted EBITDA. So that the system is just currently broken, and we recognize and realize that. So the idea is to put your head down and work through that. And growth happens during these times. Nobody makes money on real estate buying at the top of the market, and so we're at every event here. We're approached by somebody that wants to talk about potential opportunities to work together. I think there's going to be increased consolidation, and the last point. Zach and I had a meeting last night with the manufacturer, one of the 3 biggest ASIC manufacturers. The CEO is here from China. And through the translator asked the question, 2 years ago we were at this event and nobody heard of you, and now you're the one that people are talking about. How did you do it? And so I think, to kind of put a bow on that comment and where we're going, and I think where the bottom is, we hosted an event a couple of weeks ago at our facilities in Georgia, brought in everybody, analysts, reporters, the power company, representatives of city, mayors. Just wanted to show what the business really is, because there's so much mystery, right? Mm-hmm. And Axios sent a journalist, Brady Dale. He's been covering Bitcoin since 2017. He wrote a really cool piece, and he said, CleanSpark is made up of successful energy entrepreneurs leaning into the Bitcoin space, not Bitcoin entrepreneurs trying to learn energy. And I'm paraphrasing, but I think, when you look at the whole ecosystem, what it comes down to is being disciplined and being responsible. And the companies that are doing that are going to be well positioned. And I think you're going to see that as we kind of approach this bottom, as the chips fall out from, just basically common criminals and thieves like SPF, and we weed that out, and people stop associating Bitcoin and crypto and see the differentiators. I think you'll start to see greater adoption, and we've been building all along in preparation for having. So we're excited for the position we are, and quite frankly, we're making significant investments in the future and continue to support the blockchain.
Okay. Yeah, a lot to pull out of that one. I definitely believe there's going to be consolidation, and I personally feel at this point in time, you don't need to pick the winning horse. You just need to pick the horses that are going to get through the race here over the next couple of quarters or months or years or however long it is. And the other point you made that I really like, Matt, and we talked about last week, is all of this drama we're seeing with these companies going bankrupt. That's not a failure of the protocol. That's a failure of people, right? And greed and criminality and stuff like that. So I think that's a major point to bring up here. And then the third thing I wanted to mention is just this overreaction. And you see it in markets either way, whether we're really bullish, really bearish. And I would tend to agree with you that I think if we're not at the bottom, we're very close, and the market has pretty much priced in every possible negative thing you could with Bitcoin right now. So that's why I'm an investor, and that's why I'm long and bullish on Bitcoin. So that's great. Thank you very much for that, Matt. And final question for you. Any catalysts we should keep an eye on, and kind of closing comments from you? And then finally, just where can people get more information if they want to learn about CleanSpark?
So thank you for having us, and thank you for giving me the opportunity to talk about this stuff. There's so much FUD and so much fear, and there's the perception that because one company does a bad job that everybody's doing a bad job, or because one group is fraudulent that everybody is. And so it's important to have a medium like your channel that we can come on and there's no holds barred. We don't, there aren't any secrets. We're happy to talk about whatever you want to talk about. So I really appreciate the opportunity to discuss it.
Sure.
And be happy to come back anytime. Catalysts, I think that obviously the Fed talking about maybe easing up is going to be a big deal. Specific to our space, rather than focusing on the price of Bitcoin, I think we're looking at the like, for example, the Henry Hub future pricing model for energy. We're looking at spot prices on Bitcoin miners. We're looking at what all these bankruptcies are going to do to the space with regards to excess rigs now being unplugged, and how does that adjust difficulty, and where do the opportunities lie? So from an industry catalyst, I think we think a lot about difficulty, energy prices, and spot prices on the rigs.
Okay.
Because with the current market, there may be a time that it makes sense to curtail for an hour and 45 minutes a day and do dialysis on your tanks or do maintenance on your fleet, just because the exposure to market-based energy prices can really squeeze those margins. So I think we see catalysts in our space being consolidation and a decrease in difficulty based on miners being unplugged. I think macro wise, the Fed I think we've got to get inflation under control and deal with the overreaction, in my personal opinion, that's kind of led to this environment. But then finally, I think FTX is probably the tipping point. I think they were the biggest one.
Yeah.
Somebody had to fail. Somebody had to be the bad actor to create this kind of rebuilding and restoration of trust in the space. And the fact that the Bitcoin blockchain is unblemished, it didn't commit fraud. Sam and his team committed fraud, but I think as that starts to message out that the one stable, the one constant is the fact that there's 21.4 million Bitcoin that are ever going to be generated, and that blockchain is secure, and proof of work is a feature and not a flaw, and that's what leads to the security. And I think that the cream will kind of rise to the top in the space. So I think in the short term we're excited about what the kind of weeding out of the space and clarification about Bitcoin means for the industry overall.
Perfect. Well, yeah, thanks so much for being here. It was a pleasure. I'll definitely have you back on the channel. Good luck with the conference this weekend. For any of you who are still watching at this point, hopefully you found some value. So make sure you hit the like button, you guys. If you're not subscribed to the channel, McNallie Money, feel free to do so. I'll leave a link to the CleanSpark website in the video description so you can go in, find some additional information out for yourself. Thanks so much for being with us today. We'll see you in the next video.